So Donna, thank you so much for your time today. I always really appreciate speaking to you because you can kind of break down the mortgage market and all that, stuff they always hear in the news that, confuses people into very simple terms. I know when I first started in the industry, you kind of explained almost everything about the mortgage market to me and a lot of our agents. And your husband as well always, gives really informative information to us. Because, mortgage is always in the news these days and interest rates going up, and sometimes people don't really know exactly what that means. So maybe one of the first questions I have for you is like, what is a variable rate mortgage, and then what's a fixed rate mortgage? Something very simple.
Sure.
First.
Yeah. So like a variable rate mortgage, there's actually two types of. It's called a true variable, which means that your monthly payment stays static. And what happens is that when the prime rate goes up, then it adjusts in the back end so that you're actually paying more interest. With like a adjustable rate variable rate mortgage, that means each time the prime goes up or goes down, then your interest rate changes and your monthly payment changes. So that's why it's important when we talk to our clients to explain those two options to them with the variable products, because based on the clients, maybe they're looking for cash flow, or can they manage the monthly payments going up, right? And with a fixed rate product, that means for the whole term of your mortgage, just say it's a 1 year, 2 year, like the up to 5 year, you would be paying, obviously the same monthly payment for that whole,
the whole term.
Whole term. Yes.
Okay. So right now, I guess like the policy rate right now is 4.25 from the Bank of Canada. So does that mean like a variable rate's close to 6% now, or?
A variable rate, I mean, it really depends on the actual lender, right?
Okay.
So, the discount rate is not going to be as high right now.
Yeah.
So that's why it is going to be dependent on the client's, I guess, preference as well, right?
Yeah.
What it is that clients are banking on the prime going back down in the near future. So, economists are predicting that maybe next year, like 2023, in, fourth quarter, that the rates, the prime will come back down. And so, like we would say to our clients, like if you're in a variable rate product right now, it's good to sort of ride it out, right?
Yeah,
because right now you're sort of at peak right now, right? They're very close, I would say, like the variable, like with a fixed rate.
Okay.
Like fixed rates right now like 5.5, right? So that's why like you're slightly maybe, like I said, depending on the lender, maybe you're around 5%, right? So it is still, I mean, it could be lower, it could be around 5, like at 5.5, like, or just below that. But again, it's really the client's preference, right? Okay. We have to look at each individual's situation and then sort of sell them the products as what we have, right? Because we have access to different lenders, it's not just only the big fives that we have. We have alternative lending, and we also have private lending as well.
Okay, perfect. So I think now that we kind of, have those defined, a lot of our agents work with, first-time home buyers because, everyone's been, priced out or seeing how high prices have been in the last, 5 to 10 years. And now prices are starting to, they're not declining that quickly, but, it's more of an opportunity for buyers. So do you have any advice for first-time home buyers getting into the market now in terms of financing or mortgage options?
Yeah, so I mean, with being a first-time home buyer, I know, especially right now with the interest rates being, back to pre-pandemic, right? They are qualifying at a higher qualifying rate, right? So it's contract rate plus the 2%, right? So that means, they're qualifying at potentially almost 8%, right? Like 7.5 to 8%. So yes, that means they would qualify for less of a loan than previous, I guess, a year ago at the 2% interest rates, right? So, when we talk to the first-time home buyers, we talk to them about different ways to sort of increase their purchasing power. I guess solutions for that would be either, they're buying with someone else, right? Let's just say another family member, someone that you're looking for who has minimal debt, and they are actually generating income, right? So that's one option. Another would be increasing your down payment. So, looking for solutions such as, do they have any family members, like immediate family members, we're talking about like parents, siblings, or grandparents that can gift them any down payment funds, right? Because that would also help them also, increase their purchasing power.
Okay.
Yeah, so like, those are, the main ones, right? But when we talk to a lot of our clients who are new and are just coming into the market, just because they're not ready now to purchase something, it's great to actually get assessed
Yeah,
earlier,
for sure.
right?
Yep.
Because like, when we assess a client, we don't just look at like, okay, fine, okay, we talk to them about down payment. Is it the goal to how to, like save more money, or is it that maybe the client has bruised credit, right? Then we work on, how to teach them to improve the credit, right? Maybe they don't have a lot of credit, established credit, and usually when you look for a mortgage, lenders are looking for clients to have at least a minimum of like 2 active trade lines, right? So if a client doesn't know that, then if they only have 1, right, then the time that we would have, like I guess the 6 months that we've chatted, then they can maybe go open another credit card and build up their credit, right?
That's right. So that's a good point. I mean, a lot of people I don't think know that. So the tip is really to start getting the process started, even down the road, like even if you're not going to buy immediately, 6 months or 12 months down the road, at least you can start building and get a better rate and better mortgage that way.
Yes,
well,
yes.
right?
Well, it's just pretty much like, that's why a lot of our clients that,
yes,
they're not ready now, but what, we're setting the goal for them so they know where they're targeting towards.
Yeah, because I think a lot of people only sometimes contact you guys or mortgage, brokers when they need a mortgage immediately, right? Not kind of like down the line thinking that they're going to buy something later on.
Yeah, well, I mean, our clients, like, because I guess if they're like a, like existing client, they know how we work, right? And especially even with our realtor partners, when they refer clients to us, we always explain to them that it's great to get pre-approved
done first,
now,
absolutely.
right? It's because there's no point waiting, right? Because at least how much you can qualify for at this moment, and then and then we can determine what is the other solutions, right? Is it like looking to purchase with someone? Is it looking for help from the family? We do have other products that we have as well, right? Where we're looking at talking about family. Family down payment, gifted down payment funds. A lot of our older, I guess, the parents, right? They are actually looking at products such as like a reverse mortgage, right, where they can actually take equity out of their home and help their children. Like, so it's sort of like an early inheritance, right? Yeah. So that way it helps their children to get into the market. Exactly, right? Absolutely. And it's great to be able to do that because, I know it's maybe not something that people want to, talk about when, the time comes that it's an inheritance, right? But they're able to help them now. And that's, that's
a good point. Especially when the market's a little slower now, maybe it's a good time to do that and then get into the market, get their feet into something, into the property ladder, right? Yeah. So a lot of our agents have clients, or even myself have clients that have 2 properties or multiple properties. I guess with the, increase of interest rates, people are going to find it we're getting a lot of calls saying we may not be able to carry it, prices going up. Are there any kind of financing options that you can kind of recommend for people that have multiple properties, like going into next year or so?
Yeah, so I mean, it's like for us to assess the client again, we can look and see if there's a solution for them to, example would be like a second mortgage, right? Because I mentioned that we do also private lending. My husband, he's actually the co-owner of it's called Engage Capital. So we do first and second mortgages, like the privates, right? So instead of like breaking your existing mortgage, we could look at giving you a second mortgage, right? That way it doesn't affect your existing mortgage, and you can get extra funds based on the equity in your home, right? So that you can actually either consolidate your debt, right? We have a lot of clients that are, let's just say, paying, if they have a lot of different types of lines that are open, and they're looking to, obviously consolidate and then reduce how much they're paying in interest, right? Then that may be a solution for them, right? So,
Okay. So there's many options for them as well.
Yes, we have many options. It's like, so really, like, I mean, when I say, like, even like I have a lot of actually realtor partners that would come to us and asking about pre-construction, right? So we have clients that who were purchased, and that was like maybe 5 years ago, right? And their closing may be coming up, and they're a little bit worried. They're saying, can I qualify for the mortgage? And you know what? It is important to get it reassessed,
of course,
because at the time, when they bought, the interest rates were different, right? So maybe the client's situation has changed as well. Like the way that they're earning income, maybe from becoming salary, they're self-employed, right? Yeah. So again, we have to look at the different solutions, and we do have access to like all the different types of like, for, salary, self-employed, and people who can't show income, right? Obviously, can't show income would be a private solution, but that's also a short-term solution.
Yeah,
so, especially if you're looking at a client that has, put down all these deposits, builder deposits to purchase a pre-construction, they don't want to lose those deposits. They want to be able to at least close on the property. So the goal is to help them get into, a private solution, close on the property, and then at that point we can actually reassess and either move them into a, with an alternative lender, B lending, or if they can qualify with A lender, then it would be an A lender, right?
Okay. Yeah, that was a great thing, because that was one of my last questions for you, is pre-construction, because we do have a lot of clients that purchased 4 or 5 years ago, and things are going to start closing probably in 2023 or 2024. And we're getting a lot of calls too. That's why the assignment market has been flooded with listings now, because people are either can't close or they don't have the option to close next year. But I think after speaking to you a couple of days ago, you do have options for everyone.
Yes,
in that
we
situation
do.
as well.
Yeah, again, that's what I'm saying. It's obvious. It's going to be a rate, right?
Of course.
Right?
Yeah.
And but we will lay it all out to the client, right? And explaining that would be also, I think a lot of our partners might not realize, or even the clients, like, as a mortgage agent, we're here to provide the service to them, and we don't charge for our services, because the lender that we choose to work with, they give us a referral fee, right? So for you to walk into the bank and get your mortgage from someone that's there, they can only sell you what products they have, right?
Course, yeah.
So when you come to us, we look and see, is it like what's important to the client? Is it important for the client to pay down their mortgage faster? Then we may look for a lender that has higher prepayment privileges. If it's a client that is looking to grow their portfolio for investment properties, then we'll structure it so that we put them with a lender that may have better rental offsets, so that they can actually continue to qualify for the next loan, right? So that they can continue to purchase.
Right. Yeah, so I think that's a great kind of option for people that have pre-construction before and starting to close it, and because we're always encouraging people to close their properties.
Yes.
Right.
Yeah.
Close it and then find options to finance it after. So
for sure, since the time that they purchased it, and they're going to be closing, obviously equity has already increased, right? So it is all beneficial for them to be able to close, and then if they need to sell it, then that's obviously up to them, right? But I know everyone wants to be able to purchase something.
Right.
That's a great investment, right? Yeah. Opportunities. So definitely.
Okay, great. No, thank you so much for your time. I know you're busy today with a lot of calls and working with clients. Can you just let us know how we can contact you, or I'll leave your contact information in the description below as well.
Sure. Yeah. So yes, you can feel free to contact me via phone call or email, and I will reply back, and I can always set up a time to chat with any of your clients. But yes, it's happy to help always, and look forward to assisting.
All right. Well, thank you so much for the tips again, and kind of clarifying everything for us. And then we'll talk again soon. Thank you so much.
Thank you, Isaac. Bye, everyone.